week, a $5.9 trillion asset manager, Fidelity, came out and launched their very own Bitcoin retirement product. Now, this is fascinating for a multitude of reasons. One of those is that Fidelity only 5 days earlier published a massive report where they said Bitcoin was gearing up for the acceleration phase of its bull run. And again, let's not forget, in the exact same week, Larry Fink published this 27-page shareholders letter where he not only said that the US dollar is going to lose its dominance as the global reserve currency to digital assets like Bitcoin if it doesn't get its debt issue under control. But Larry also had an entire paragraph and an entire section in this 27-page report talking about from retirement to tokenization. So again, the question I want to ask you guys today is, what do these multi-trillion-dollar firms know about Bitcoin that we don't? Why are they so fascinated with Bitcoin being integrated into their retirement products? I think it's something that's worth exploring. So firstly, what did the $5.7 trillion Fidelity do? Well, now they're allowing their investors to invest directly into crypto in their new IRA plan. Now, this is going to be a tax-free product that lets investors get access to Bitcoin tax-free, irrespective of how they want to buy it or when they want to buy it or whether they want to sell Bitcoin quickly. They're going to get access to Bitcoin in their retirement accounts. I think that's massive. I think that's really big. Now, something else that's big is Fidelity did publish this report where they said that Bitcoin's bull run is just getting started. We're going to see an acceleration phase begin soon. And this is one of the charts from the Fidelity report. We can see 4 Bitcoin bull runs on screen right now. We can see how bullish the 2011, 2013, and 2017 Bitcoin bull runs were. And then in orange, we can see how disappointing the current Bitcoin bull run was. This is the 2024 to 2025 Bitcoin bull run, and it really has not even started yet. We are so far away from the next phase of the Bitcoin bull run. In this report, Fidelity said, look, the correction we're seeing right now, this is normal. There is nothing wrong with a 35% correction. Look at this chart. They titled it Bitcoin's acceleration phase, drawdown percentages. These are drawdowns in all prior bear markets, 2010, 2011, 2013, 2017, 2017. Have a look at this big one. We saw a 70% drawdown in 2013 in the middle of an acceleration phase or in the middle of a bull run. Same thing in 2021. Look at this big red, well, we'll call that a candle. I'm going to behave myself here. Look at that big red candle. We saw a 53% correction in the middle of Bitcoin's 2021 bull run. So Fidelity, they asked the question, are we approaching the end of this cycle? They said no. They said based upon days following the halving, this bull run is only just getting started, and they expect the acceleration phase to begin. Another way they illustrated that was they said, look at what happens to the price of Bitcoin after price discovery. So after Bitcoin hits a new all-time high, this is typically when the price of Bitcoin really goes parabolic for about 9 months. Again, in 2017, we all know Bitcoin rallied from 1K to 20K in like 9 months. It just went absolutely parabolic. And Fidelity, $5.9 trillion asset manager, was pointing to a similar dynamic. They said, look what happened in 2013 once we got above an all-time high. Look what happened in 2017 after we got above an all-time high. And they said, look at what happens, and look at what has happened to Bitcoin since it breached its all-time high in November 2024. We've gone sideways. We haven't even started. But again, have a look at previous bull runs. You do see a little bit of sideways to begin this 2017 Bitcoin bull run. Same thing with 2013. You don't go parabolic straight away. Typically, you have to wait a number of months. And this is kind of what Fidelity was laying out in their report, which I found fascinating because that report did come only 4 or 5 days before they launched said retirement product with minimal fee. Oh, I thought it was 0 fee. Who's getting rug pulled? Somebody's getting rug pulled. But they launched this zero fee or minimal fee Bitcoin retirement product. And again, they are a $5.9 trillion asset manager. They are absolutely massive. When we compare them to the other asset managers in the world, there is a reason why we're watching very carefully what Fidelity is doing, because they're number 3 on this list of the world's largest asset managers. They are huge. They are absolutely massive. And right now, it looks as if they're competing with BlackRock, because we all know what BlackRock's recently been doing in the space. They published a report where they said a 2% allocation in Bitcoin, you need a 2% allocation in Bitcoin. It's not questionable, okay? BlackRock laid out the numbers, they laid out the maths. And again, this is the same BlackRock who in 2022 published this report where, as you can see in yellow, they said that the optimal BTC allocation is a whopping 84.9%. which is pretty crazy. And this is the same BlackRock that's hosting massive conferences and speeches where they're calling Bitcoin a risk-off asset. They're saying Bitcoin, it's got a more fixed supply than treasuries and gold. It's more decentralized than gold and treasuries. Its cost to move is lower than gold and treasuries, and its cost to store is also lower than gold and treasuries. And in this little matrix with all the colors on the right-hand side, it shows that gold's got a $14 trillion market cap, US treasuries, $25 trillion, and Bitcoin at the time only had a $1.3 trillion market cap. But in BlackRock's comparison, Bitcoin had 4 green boxes. It was the superior risk-off asset compared to US treasuries and gold in BlackRock's opinion. And really, it's got a long way to go to catch up to these other assets in regards to market cap differential. Now, while we are talking about BlackRock again, I want to remind you guys, this was the quote that kind of blew up the internet, so to say, last week when Larry Fink wrote that massive 27-page letter to his shareholders. And we can see here, can Bitcoin eat away at the US dollar's reserve status? Great question, Larry. At the very bottom, he says, if the US doesn't get its debt under control and if deficits keep ballooning, America risks losing that position to digital assets like Bitcoin, talking about its global reserve currency status. So again, we have to ask ourselves, is Bitcoin going to be the next global reserve currency? I love this chart. It shows us the global reserve currencies around the world. Now, before I show you the rest of this rabbit hole, just want to remind you guys, if you wanted to join in on the fun and also buy some Bitcoin, we always encourage you guys to check out what Rhino Bitcoin is doing. We call them the all-in-one Bitcoin super application for very good reason. They're the best place for you guys to buy your Bitcoin, but you can also sell Bitcoin on Rhino. You can send Bitcoin anywhere around the world using the Lightning Network on Rhino, and they're even giving you guys $10 of free Bitcoin if you sign up with Rhino and use a promo code Bitcoin News. So we always encourage you guys to check out what Rhino is doing. And again, BlackRock's not just writing favorable letters about Bitcoin, they're adding Bitcoin into their very own model portfolios that literally hundreds of trillions of capital pays attention to. BlackRock is the largest asset manager in the world, and when they add their Bitcoin ETF to their model portfolio, they're putting their money where their mouth is. Some people just think Larry Fink's here in Bitcoin grifting, just collecting the transaction fees, and he's gonna, I don't know, rug pull Bitcoin or dump on Bitcoin. Some people say he doesn't actually believe the things he says in his interviews where he calls Bitcoin digital gold, it's digitizing gold. He nearly called Bitcoin hope in one interview. He's also called Bitcoin a legitimate asset, okay? He said it's not a speculation. I think the fact that BlackRock finally adds Bitcoin into its very own model portfolios is maybe a sign that BlackRock believes what it's talking about. And hey, maybe this chart here is the more accurate chart. Maybe Bitcoin is the next global reserve currency holder, not the Chinese yuan. And, you know, maybe America will lose its global reserve currency status to America. I think it's inevitable. I do think Bitcoin is going to actually help America hold on to its global reserve currency longer than most people think. that's a little bit of a controversial opinion that I might just park to the side for another day. Or maybe I'll dive into it in a few minutes' time. Maybe first I'll answer some questions and comments from the chat, because the chat is lively. Vegan Warrior, Bitcoin is for the free. Politics matter if you like it or not. Democrats hate freedom. This is why they haven't supported Bitcoin. Great comment. Vegan Warrior also says free countries are embracing Bitcoin at the grassroots. This is also a really good comment as well from Stone Trees. China is selling US treasuries, making the US 10-year yield. We were looking at yields earlier on in today's video, and I know for a fact I saw some interesting tweets about China's yield earlier. I know I can dig it up because I found it somewhere. Okay, I lied. Maybe I couldn't find it. You know what? I'm going to find it. I like a challenge. I like to do this live. China selling treasuries. Who can beat me to the punch here? Okay, so China's selling a ton of treasuries. $50 billion sale in treasuries. Let's see what else Twitter has. I love that chart of Jerome Powell. It's electric. Have a look at this. This is great. China imposes 34% reciprocal tariffs, and have a look at what happens to the green line. Treasuries spike. So China, essentially what Zero Hedge is laying out here is that as soon as China announced those reciprocal tariffs on America, they sold a ton of treasuries. Look at the green line spike. So again, those not familiar with bond maths, you selling bonds, if nobody's buying bonds, the yields go up, supposedly to attract people to buy the bonds. China's total holdings of US Treasury bonds. This is true. They have been selling off Treasury bonds for a long time now. So I actually agree with this. You can see this has been slowly decreasing between 2010 and 2022. Have a look at the acceleration phase, though, here since 2022. So China looks like it's sold about 30% of its total holdings since 2022 alone. So I do think we're entering some sort of a acceleration phase. Don't you love some of these charts are absolutely electric. Have a look at that one. That's great. The world's central banks don't know what to do. They do not know what to do. I think everybody's coming to the realization that you just don't want to be stuck holding government bonds anymore, or cash, or dollars, or any currency, Peruvian soles. I think that's a agreed upon consensus there. We are all McLovin. Is that an agreed upon consensus of the chat? We are all McLovin. I love that. All Night Hider says, smoke that like Cheech and Chong. That's a tongue twister when you've been talking for 55 minutes. We do have 3,200 of you guys tuning in. If you are enjoying the stream, you can smoke that like button like Cheech and Chong. We would appreciate that if you do enjoy the Bitcoin content here on a Tuesday afternoon. And speaking of Bitcoin content on a Tuesday afternoon, if you missed our recent interview with James Lavish, I'm going to put a link to that interview with Mr. Lavish right about there, because we were talking about what is going to change once Bitcoin gets back to $100,000. Are we going to reach a little bit of an event horizon? Well, click on that link right there to find out. And with all that said, thank you so much to the 3,000 of you guys tuning in. I'll see you all in the next live stream.